Well, good afternoon, folks. It's just gone lunchtime on Tuesday, the 4th of January. Happy New Year. Hope you all had a great time over the holiday period. I did post all my reports every day throughout the Christmas and New Year period when the markets are open, but I was a bit lazy on the video front, so I sincerely apologize for that. But there really wasn't an awful lot going on. And to be honest, the charts weren't really making a huge amount of sense. Over that period, of course, volumes are much lighter. The big boys are not getting involved, the banks, the hedge funds, that kind of thing. So it's pretty much just the retail guys that are in the market. And the funny things can happen. So I don't like to get too committed to trades over that. I don't actually trade over that period. To me, it just doesn't seem worth it. If you're working for a bank and you haven't made your bonus by the time Christmas comes, or even really by the beginning of December, you're not going to suddenly make it over Christmas. So that's why these guys are not really heavily involved, and that's why volumes are thin. And you get some crazy stuff going on. Now, on that subject, I'm looking at the Germany 40 because I'm wondering if this is going to develop into a head and shoulders pattern. It's possible. We could. Now, let me just get a drawing tool here. So it's just possible that this could be the left shoulder, this could be the head, and then we could be, or actually maybe that's the head, and maybe now we are forming a right shoulder. Of course, we don't know until we turn around, and we don't know until we break the neckline, which is this blue line here. So until this is broken, the head and shoulders pattern is not confirmed, it's not completed, and therefore it's not a sell signal. And jumping the gun and betting that the right shoulder will form is really not a clever idea, even though we are overbought on the slow stochastic here, getting overbought. And the last time we got overbought, well, we can remain overbought for quite a significant period of time, of course. This is not a timing tool. This tells you that we're overbought maybe, and that we might see some profit taking, but it's not a timing tool, so you never quite know when that might happen. Anyway, that's the kind of thing I've got my eye on. If we keep going, and then I will wonder whether we will get a double top. That's not a straight line, but you know what I'm trying to say here. I will then wonder if we will get a double top pattern. That would be the next question. And then if we break up through that all-time high, of course, that I would assume is a buy signal and would indicate that we are starting the next leg higher. And then that this whole pattern here, going back quite a few months actually, was just one big consolidation pattern. So it's kind of a crucial time. It always is when stock markets retest all-time highs. You wonder whether that is going to turn out to be a very significant resistance and we'll get some reversal pattern, or whether this whole thing going all the way back really to March, April, yeah, look at that, of last year, is really just one huge consolidation pattern in a bull trend, and we'll break higher and then absolutely rock it. If we do break higher, we probably will see a good steady climb, because that is a very, very long consolidation pattern. So it would be indicative of quite a significant rally to follow this year. Sticking with the stock markets, let's have a quick look at the Nasdaq. That looks like a consolidation pattern, probably. One could argue that that might be a double top, but to me, I'm not going to look at it. US 30, I haven't had a look at it lately, but we were retesting the previous high. We're doing it again, the all-time high. Possible double top there as well. You know, always a possible double top when you retest the all-time high. Now, when I was talking about crazy markets earlier, look at gold. This is pretty bonkers. Gold's been a real difficult one. It seems to be almost caught between, obviously, the gold bulls who know that higher inflation, or they think that higher inflation should push prices a lot higher. You get these nice big moves. I mean, these were good moves. Up, up, up. You'd be feeling quite happy as a bull. But as soon as we hit the 61.8% fib resistance level, the market absolutely plunged. Now, that's not a move that I really saw coming. But when you look at this chart, it really is such a difficult, there's no pattern, there's no clear trend. It really is quite difficult for a day-to-day trader to try to figure out where the market's going to go next. Anyway, in this case, 61.8% of this very small move turned out to be the resistance, and the market plunged in what really is a bearish engulfing candle. Look, the new high yesterday morning, followed by a significant plunge, certainly engulfing the previous day's candle, almost engulfing the day's candle before that. Now, hang on, where are we? This would be the Friday, that would be the Monday. So it almost engulfed Friday's candle. It certainly engulfed the body of the candle. So it's pretty negative, but The reason I had a big support level down here around 1800 is partly due to the 200-day moving average there. Sorry, that's the 100-day moving average, is it? I think, no, that's the 200, beg your pardon. 200 is the green one. Now, I also want to show you on the 4-hour chart, because we've got some really good moving average support there coming in. And actually, what I really should be doing is drawing my fib levels on there on this short-term chart now, just to see if the fib levels tie in with the moving average levels, and they kind of do. 38.2% fib at 1801, coupled with the 4-hour moving averages, the 100 and the 200 coming in to converge there around 1798. Now, so far that has been a good support level, and we've bounced off it. I put that in this morning's report, but as you can see, the 50-period moving average on the 4-hour chart so far offering some resistance. Anyway, it is difficult. I'm trying to decipher gold. I'm trying to find good trading levels, but on a day-to-day basis, I wouldn't have the faintest idea. Obviously, I hope we bounce off the 1800 level, but if you ask me what could happen by Thursday, Friday, I really wouldn't have a clue. There is no clear trend or pattern to follow. And the US Dollar Cad is another one, really sort of indicative of just a bit of a Wild West market at the moment, because the big boys are not back, probably. No one's going to get fully involved from a bank, hedge fund or broker perspective when they've just turned up on the first day. They're going to be biding their time, trying to find a good trade opportunity. They're not going to be thinking, right, let's go in gung-ho. They don't want to risk starting the first week or two in January with a whopping great loss. They obviously want to get some ideas together, see what patterns they can find, see what trade opportunities they can spot, maybe have to wait for the levels to be hit, and then try and get the new year off to a good start with a little bit of profit. So I think it's going to be like this for a week or two for those reasons, really. As you can see, Dollar Cad, big, not quite an engulfing candle, because we didn't make a new low yesterday, but certainly a very strong recovery. The body of the candle certainly engulfing the body of the candle for Monday. For what are we now? That was Monday, so that was Friday. Friday's candle, and reaching well into Thursday's candle. As you can see, we're holding steady in the Dollar Cad, but again, tricky. No real short-term indication, sort of pattern-wise, of what we could expect. Now, if I remember correctly, the Aussie dollar might be showing a head and shoulders pattern. Where was it? Right, knew it was an Aussie pair, but it wasn't the Aussie dollar, it was the Aussie yen. Here we go. So, again, I wonder if this could be a head and shoulders pattern in the making. We've got potential left shoulder, kind of rounded, and then we've got a more pointy head, and then if this turns out to be a right shoulder, then obviously the neckline, which I won't draw with that line, I will draw with, hang on, I'm just going to take that back and use this on the chart, and then it will stay there. There we go. That would be the neckline to the head and shoulders if it is a pattern that is being formed. Of course, we don't know that for sure. Let's just have a look at the weekly chart, get a bigger perspective, and see how big that run up is to this potential pattern. So, yeah, it's a decent run up. The reason I'm looking at it, I see so many people on Twitter, social media, even and YouTube, calling these patterns, and they're not in the perspective of a move. So what I'm trying to say to you is, you have to have a very significant uptrend for a head and shoulders pattern to be relevant. Now, that is a significant enough uptrend for it to be relevant, but so often you see people calling these patterns completely wrong. Even people that I've seen who claim to be in the market for years, you look at their Twitter profile and they've been trading for 10 years, and they're just calling these patterns completely wrong. Frustrates me, actually. It's one of my pet hates. But this one, I think, is relative to the big move up. So I think that could be looked at as a head and shoulders pattern. Right, Aussie New Zealand dollar, I haven't had a look at that for a while, so I just noticed that on my radar. I'm going to have a look. Let's just have a look at the weekly chart, because this can often be a pair that throws out some ideas, but no, I really don't think that is. We just do seem to be in one big sideways kind of channel, don't we? Let's put some trend lines on here to try and get a perspective of it. I would normally put fib levels on there. You guys who've been with me for a while will know I do like to throw a fib level on here, but really there isn't anything that I would want to join up. So I think, yeah, that indicates that this market really is in quite a channel. Look how the moving averages have flatlined and are all collecting in this in sort of the midpoint of the channel. That really does emphasize the fact that this is probably a scalper's market. Perhaps this is the resistance level will be too much. Market will return to the lower trend line. If we break up, then I would suspect we'll test the upper trend line. But that will certainly, if you're a range trader, that's definitely a market that you want to be looking at. The euro versus US dollar. Now that has been very much sideways. So if you've been scalping that, you've done particularly well. Actually, I don't want to look at that on a weekly chart. I want to look at that on a daily chart. And as you know, I had that 1350 level, which really has worked so well. We seem to be backing away from that. But this definitely is another scalper's market if you are looking for a range trading market. Now, that has worked quite well for me. The levels have worked. Selling up at 1350, 1370 has worked, and we're backing away from that now. So the question is, do we break the low, and do we continue in what really has been a downtrend for quite a significant period of time? Look at that. The whole of last year was actually pretty much a downtrend. Obviously, we had a big bounce back in April, but then that downtrend did continue. That peak was lower than the peak in January. So we are clearly in a bear trend, and this to me does look like a consolidation pattern, some sort of bear flag pattern, which indicates that the next move is likely to be to the downside. So maybe further continued dollar strength and a weaker euro. Yeah, that to me looks more than likely to be a bear flag pattern. Okay, just some ideas there. Get me back in the swing of making the videos and throwing them out to you guys. More tomorrow. Please do post any questions, comments, either on the Patreon channel, and I will answer them immediately. But you do also all have my WhatsApp and personal contact details, so you can certainly communicate with me on there, and I'll get back to you straight away. Right, thanks very much. I hope that was helpful. And I'm actually in Thailand at the moment, so I'm posting my analysis quite early. I have been, as you probably know, since the beginning of December. Lovely and warm out here, but I'm coming back to the UK in about 2.5 weeks. So you'll be getting the reports early for another 2.5 weeks. And then when I'm back in sunny England, we'll be back to posting them at around 7 a.m. and a video to follow after that. Okay, thanks again. Have a great day, and I'll talk to you tomorrow.